All right. Ryan, how are you doing today, sir?
I'm doing well. How are you, Bruce?
I'm doing very well. Where are you joining us from?
Buford, just a little bit north of Atlanta.
Ah, got it. Got it. Yeah, we're not too far from you. We have it's 2:30. I see people are joining and give them a minute or two. I want to thank everyone that's here, that's joining, and I'm excited about this, Ryan. I know you and we have spoke quite a bit in the past about doing this type of webinar, and it's finally here, so I'm excited.
I am too, Bruce. I appreciate the invitation, and I look forward to talking about WIPs. Is definitely part of my day to day and a very important piece of bond underwriting.
Yeah, yeah, and it's important for many contractors out there, and I think as I speak with many contractors out there, this is something that comes up quite a bit. They want to know, what is what's the magic behind all of this. So this is going to be great. And here we are. We're at 2:31. We have quite an audience here, so I'll kick us off. Welcome everyone. I'm Bruce Orr. I'm CEO at ProNovos, and thank you for joining today. We are here to unpack a topic that's, I think, often underestimated, but incredibly powerful. And it's about the WIP schedule. We're all familiar with it. We've all probably attended sessions either through CFMA or through ProNovos, but this session isn't just about compliance or bonding. It's about using your WIP as a strategic tool to reduce risk, increase bonding confidence, and drive better business decisions. And I'm excited to be joined by Ryan Otwell. He's the account executive at Sutter, McLellan and Gilbreath. Ryan holds both the AFSB and CPCU designations, and he's been advising contractors on bonding for over a decade. Ryan, before we dive in, can you share a little bit about your background and what kind of contractors you typically work with?
Yeah, absolutely. So I've been in the bond industry for about 15 years, all construction specific. Spent the first 12 years of that underwriting for one of the largest sureties. I became a bond agent about 3 years ago. As Bruce said, for Sutter, McLellan and Gilbreath, we're part of a Lara group, and our particular office is based in Buford. But I've worked with all different types of contractors over the years and different size companies, and have also worked with construction companies with a wide range of WIP capabilities, from contractors just starting out using WIPs to contractors that are using the most sophisticated WIPs.
Yeah, so yeah, I guess to say it bluntly, you know your stuff, right? Well, I again am excited to talk about this. You know, here's what we're going to cover. We will cover how sureties evaluate WIPs. We'll talk about what makes a WIP strong or weak, how to go beyond spreadsheets, and how to create a. This is interesting. Honestly, I never heard of this until I was conversing with Ryan, and he used this term, creating a WIP culture. And this, as I understand it, this is where your team doesn't just fill in numbers, they understand what the numbers mean. And I know Ryan is going to talk a lot more about this. This won't be a lecture. This is going to be an opportunity for us to create dialogue. So for those that are in the audience, jump in with any questions you have. And I have a question for the audience. So, I'm going to launch a poll here because I want to know how often, and I'm sure Ryan does as well, how often are you producing your WIP? So, let me launch this, and please, I'd love to hear from the crowd. Oh, yeah, there. Flowing in nicely. So Ryan, if you're a betting man, the answers range from weekly, monthly, quarterly, annually. What do you think the biggest percentage is?
I'm going to guess quarterly. Wouldn't necessarily be totally ideal from a bonding underwriting perspective, but somewhere right in the middle.
Well, more than 45%, they do it monthly. Quarterly, around 20%, but then the second largest is 24% at annually. So, I appreciate you guys giving us the insight. I'm curious, Ryan, what have you found to be the best frequency in which contractors are performing their WIP?
Bond companies like to hear that construction companies are running WIPs at least monthly. So that's great to see on the polling data that there's a large percentage that are doing that, because that's really the most important element of WIPs, that construction companies are getting value out of the WIPs and they're utilizing WIPs to manage their projects and to manage their construction companies. You do hear from time to time that some construction companies are just producing WIPs for the benefit of the bonding company and the bank. That's going to be a limited in value to the bond company as well as to the construction company. To really be in tune with your projects, right? You need to be sitting down with the project managers, field owners, et cetera, which we're going to get into a little bit more, and going over those jobs and kind of assessing realistic projections, on the projects. But in terms of what frequency a bond company would expect from a particular contractor, it really varies from bond program to bond program, and that depends on mostly the financial position of the contractor, but also how many bonds that they're asking the surety company to provide.
Yeah, no, that makes a lot of sense, Ryan. You know, let's flip now and talk about what gives you confidence. Can you break down what a strong whip looks like from your perspective?
Sure, from a kind of sticking to the bonding underwriting perspective, for a WIP to be strong, the first thing it has to meet is the critical components of what a bond underwriter needs to produce a WIP within their system. Because a bond underwriter is going to take the contractor's WIP and they're going to plug it into their own software. So the four elements that the bond underwriter needs is the contract price, billings to date, cost to date, and total estimated cost. And that's going to be a very basic WIP, right? But it at least needs to have those elements. And the bond company, from having those basic pillars, if you will, of the WIP, they can build out under billings, over billings, cost to date, gross profit remaining, et cetera. And it is advisable that a contractor is actually utilizing a more detailed WIP as well to manage their business, because if they're just utilizing those basic columns, they're going to be limited in the ability to make detailed decisions about the business and projects. And then that kind of ties into the fact that to be a strong WIP, really the contractor needs to be able to use that, right, to help manage their business. And you talked a little bit about WIP culture, when we kick things off, and really to me that means that producing WIPs and managing the business off of those WIPs is kind of part of the DNA, of the company. And that always starts with the top. It starts with the owners and the leaders of the construction company, that they buy in and believe in that value. Otherwise, the rest of the employees from second level management to the field, they're not going to believe as much in the importance of the WIP. And so that would cause a breakdown of communication between the field, PMs, upper level management, et cetera.
So, the whole WIP culture, I think there are many contractors, they just look at this as an opportunity to just, report numbers. But, when you use the word culture, that's a pretty strong word. I have sometimes used the word data culture. And I think that what we're saying is almost something similar, and it's taking care of more than just the projects from a construction perspective, but the care that we put in the data that we're managing. Um, would you mind telling me some of the some of the benefits you've seen from companies that have a strong WIP and data culture?
Sure. Well, ultimately, if you're utilizing accurate WIPs and you have good processes in place, and along with that, good software, you're going to be making better business decisions, which is going to lead to better profit margins at the end of the day, because you're better in tune with those projects, and you're also better in tune with your long-term planning. And things like the meetings that I mentioned where project managers are meeting with upper level management, you can identify future leaders of the company. You can help
Mm,
train up other project managers, maybe assistant project managers or newer project managers, because ultimately, right, you need to have a better understanding of the financial implications of the project in addition to just what's going on in the field. It all works together. You need all of the knowledge. And then managing the overall risk of the business, right? To be a long-term sustainable business, obviously you need to be plugged into each one of those projects on a regular basis so things don't sneak up on you, and WIPs are a really critical part of that. I would say in my experience, most of the best construction companies that I've had an opportunity and privilege to work with on their bonding have had this strong WIP culture that I'm talking about. Because a lot of times we talk about the software aspect, which is very important, and the meetings and the processes, but really it comes down to me, the most important element is that belief from top level management of pushing, the values of those WIPs and believing in it. And obviously the bonding relationship benefits significantly from all of that. Because the bond company's view of the risk that they're supporting, all of these things in terms of a WIP culture make you a better company, make you a company that manages your risk better, which the bond company in turn has more confidence in and can support and extend more surety credit for you, especially when every construction company is going to go through some sort of change in the business. It could be a major loss that they go through. It could be kind of a perfect storm situation. It could be maybe they're shifting in terms of territory type of work slightly. They want to grow the amount of jobs or the size of the projects. All of these things change the risk profile, right, of the construction company. Having the foundation of strong WIPs and that confidence from the bonding company that you know exactly where you're at, at least within a monthly period, and you're making these adjustments, it helps the bond company get through those changes with you and helps them support your business plan, and which is what you ultimately want, right?
hmm Yeah, you're a partner. You're a part. Do you think that you are typically looked at as a partner, or more as a vendor? And I'm not specifically asking you. I'm kind of just asking in general, when contractors are working with surety, do you think they view them as another vendor, or is it truly a partner?
It just really depends on the agent and the contractor, right? I mean,
Mhm.
I believe you have to earn the trust of the client, right? And to do that, you have to follow through with what you say and bring value. And so that's what we're always striving for with our clients, to have a true consultative relationship. But just like in any other industry, it varies, right? Agents in my world, they can handle just insurance, they can handle just bonding, they can try to handle both, and the relationship can be very different. But we're always um, striving to be a good trusted consultant with our clients.
Got it. I love it. All right, let's get back to it. So we talked about the anatomy of a strong whip. I think a lot of us understand this. You know, again, I do not want to make this just a lecture. I love to hear from the audience, and I'm curious. Looking at this poll, what are you using to create a WIP? I'm going to launch one more poll, and again, I'll share this because I'm sure you all also want to know what others are using. Let's see. All right, here we go. I'm sorry. Let's see. There we go. Launch the poll. All right. Um, I imagine that a lot of contractors are using Excel, and probably for good reason. I know that Ryan, you more than likely have your thoughts on what you feel most contractors are using, but I'm kind of curious. We got Excel as an option, accounting software, other technology. Don't know. What do you think is a primary driver here?
I think and it will vary by company, right? Contractors that typically where we see Excel and basic spreadsheets, or contractors that might have just a handful of jobs where they're staying very in tune with that. And they haven't gotten to the stage where they want to up their report capabilities. Um, that does provide a lot of limitations, on a company in order to grow the bonding, relationship and capacity with that. As contractors move up kind of into the middle market space and they get more projects and they're building out, their staff and so forth, generally speaking, we start seeing Excel fall off, and they're moving more towards sophisticated softwares and platforms that speak to each other, where you can have real-time updates, and just more sophistication in the overall reporting.
Yeah. Well, I've shared the results. 61% use Excel and 29% use their accounting software. Um, I started this question about 2 years ago. I was fortunate enough to speak at CFMA's national conference, and one of the questions that I really thought about it, and I typically ask is, you know, and this goes back to the importance of the WIP. I would ask, who's responsible for it, and most of the time, if not all of the time, I hear, it's the CFO, it's the controller, it's an accounting function, and then I ask, well, who is responsible for providing the input? And most of the time, if not all of the time, it is not the CFO or the accounting group. It happens outside. And I think that if everyone agrees to the idea that the WIP is one of the most important financial instruments that you have, then how do we put more importance on this and around this? If we're using Excel, Excel is not bad in and of itself, but we all know the struggles about Excel and using this. And I'm curious, Ryan, if there is an answer to this that you might have, how do sureties react when they get a messy or outdated WIP in Excel? What kind of message does that send to you?
Well, really focused on the messy and outdated, piece of it. Obviously, you don't want to be sending your surety something that isn't accurate, and that also can tie in with your balance sheet and income statement. Um, that doesn't instill confidence, but going further, if we understand the processes that are going into developing it, Excel spreadsheets are acceptable, at some level. It's more about knowing that the contractor is in tune. But once you start moving up into that middle market type space, the expectations start to increase, because your bonding needs are probably going to be, increasing with that. And the main thing is for the surety to know that where you're at from a financial perspective. Percentage of completion accounting, right, is kind of the industry standard in the construction world. And with percentage of completion accounting, your WIP drives that. And so ultimately, like your underbillings and overbillings on your balance sheet should tie into your WIP. The revenue earned to date, gross profit earned to date from your WIP should tie in with your income statement, things like that. And so if you're providing just a basic Excel WIP, especially if it's not tying in with the rest of your financials, you could at some level, you're going to start hurting your bonding capacity there. So it's good to start making that upgrade. And I would say there's no revenue threshold there, but when you start seeing contractors reach revenue thresholds of, say 20 million and above, you will start seeing the expectations of sureties increase in terms of the sophistication of reporting, the ability to provide even additional forecasts and cash flow management reports as well. And to have those, you really need to have systems that talk to each other and are obviously more than just a Excel spreadsheet.
Yeah, and I guess what I'm hearing from you is a messy whip. It creates doubt, and
Sure, sure. I mean,
obviously,
not that a surety expects perfection, but to submit something to them that has errors on it, especially maybe costs have not been updated from the prior WIP period, if there's formula errors and so forth. If those are kind of one-off things, sureties can move past that, quickly. But, if you're creating a trend of submitting these types of WIPs where you have errors, and a bond agent should be helping you with that and doing a review and kind of being that second set of eyes before you're submitting it to a surety. Um, but that certainly is not what you want the bond company to see, because they're going to be first thinking about, well, the contractors should be using this WIP to manage their business, and they're not going to be making decisions based on accurate data from what we see here. And then in turn, the underwriters using this WIP to make decisions on supporting projects. And if they're not confident that the historical projects are accurate, and then furthermore, especially if they're supporting a large job, they have to be confident that they can track the results on that job going forward as well. So all of these things become more and more critical to have in place as the business changes and especially as it grows.
yeah. I think that makes sense. I I know we're going to get into this, as we talk about risk and opportunity. But again, going back to what you were saying, the lack of confidence could impact lower bonding capacity, and I think most important, it slows down the approval process, and I would imagine time sometimes isn't on the side of these situations. If someone's coming to you, Ryan, to get bonding, then more than likely there is an opportunity that they're trying to execute upon, and they don't have a lot of time. Is that fair? Is that fair to
Yeah,
say?
because these opportunities can come about, with different lead times, right? Let's take this example right here. Let's say um, you're a contractor, you have a 12/31 fiscal year end, and you're waiting on your CPA statement. You finally get it in April. You provide it to the bond company. Everything looks pretty good. You're profitable at year end. Maybe your margins aren't quite as what they were before. You have a couple jobs in that year end WIP um, that are underbilled. Maybe they've had some fade. The bond company's not having any knee-jerk reaction, but they're wanting to keep up with those projects as the year progresses. And then we get into July, and say a great opportunity comes up for you in July, and you submit it to the bond company. You got 1 week to get the bid bond approved, but this bid bond happens to be for a job 3 times the size of anything you've ever completed before. Okay, so you've got a big ask for the bond company, but this is not an unrealistic situation, right? Because we've had a
Mhm.
lot of inflation, and we see this all the time. The last couple of years, especially, we've seen the prices of jobs. I'm not, I'm preaching to the choir with our audience here, but we're pushing the bond company, and that's fine. We can work through those things. But as expected, the bond company would like a current financial update. And so you can provide the balance sheet and income statement as of June, but you haven't been keeping up with your WIPs. And remember the first situation where they wanted to keep up with those few jobs at year end that maybe, could be challenging because you have a couple underbillings on there and the jobs have had some fade. So they can't check in on that. And you're asking them to support a job three times the size of anything you've done. And then you bring into question whether they can support or whether they can underwrite and track this large job that they're about to get on. So that type of situation, and there's many situations out there, that can come up, but that type of situation, you could be jeopardizing your ability to get that bid bond if you don't have your WIP caught up there. And so even though the frequency can vary on when the bond company expects to get WIPs, it can be quarterly, it can be semi-annually, it can be annually. You want to have those done on a monthly basis in case you run into one of those situations where you need to push the surety in short order and you can produce that. And, it doesn't necessarily have to be that month before, but having, say you get a May WIP in that situation, that's going to be a lot better than only being able to provide your fiscal year end WIP in that situation.
Yeah, there is something to be said about the gap between getting you updated information and the need in terms of timing that you have to be bonded. I think one of the beautiful things about not having to go to Excel to do this is when you are in your accounting system or a system that talks with your accounting system. It's right there, right? It's almost like, hey, I run ProNovos. Whenever we need to meet, no one in my company has to go and pull data. It's a dashboard I could go to and say, hey, let's meet. And what I want to do is sort of segue a little bit into ProNovos and the WIP. I'm not just showcasing our software. We spent a lot of time and investment building this because we saw the opportunity. Again, what we're looking at is one of the most important financial instruments that you have within your organization. And formula errors, we should never have to worry about. Let's put that way behind us. I think what we need to do is think about the speed, and when you think about having updated information that's live. Ryan, when we look at like a WIP in something like this, I'm just going to show my full screen here. We talked about the pillars that make up a good WIP. I know that. Let me tell you, I've seen so many. I've seen WIPs that had columns in Excel that started with like ZZ. So, people do some incredible calculations. But when we look at this and we look at from a visual perspective, I'm curious as we go through not just the technology, but the data, if you could kind of walk me and the audience through some things that stand out, some things that you feel maybe are not as important, but I just wanted to take a moment and dive into the technology and let's talk about the data.
Yeah, I mean, I think the WIP template you have here is excellent. If you want to scroll over to a little bit, Bruce,
Yeah.
to show some of the other columns. I mean, you've got a lot of categories to work from here, and this is when a surety puts the WIP into their system, that they get from the contractor, it's going to look something like this. It's going to be very detailed, and they can actually build out pretty much all these categories from those, four pillars that I mentioned to you. One thing that we do sometimes with contractors is we'll actually take the analyzed WIP from the bond company and share that with them so they can actually see what the bond company is utilizing. And it's going to be, similar to this, but when a bond underwriter picks up a WIP, they're going to do a real quick glance and overview of things first. And one thing they go to pretty quickly is projected profit on the job, projected profit margin. And they're going to look at jobs that you are on both ends of the range in terms of particularly successful, or jobs that are thin margins or having a loss. And so just right here, what I'm saying, you see one project there that has the loss on it, the negative is Chrysler. Yeah, you're looking at losing $189,000 on that. The percent complete on that job is 84% complete, so it's in the later stages. If you go over to the left a little bit, Bruce, and then it's yeah, it's a pretty sizable contract for this contractor at sitting at about 5 million. And one thing they would, after they look at that, they'd go down and they'd see if this job is overbilled or underbilled. And so this particular job's overbilled. If it were underbilled, they would have even more questions about those underbillings. One thing I'll mention about underbillings right now, since we're on it, underbillings are cost and estimated earnings in excess of billings, and it's a current asset on the balance sheet. It actually has a little bit more of a negative connotation, though, to a surety than overbillings, because essentially when a contractor's underbilled, they're financing the project for the owner or the prime contractor. When you see an underbilling that's late on a project like this, especially a job that's had some profit fade to it, you go over a few columns back to the left, you see a 22% profit fade from the prior WIP period. Surety data has shown to them over decades that underbillings on jobs like this usually turn into additional profit fade, because they often, hide unapproved change orders or indicative of disputes and so forth. So those are going to be ones they ask about. It doesn't mean that there's going to be any significant bond underwriting change to your program, but it's going to be something that catches their attention that they're going to ask about. Going back to the profit margin fade gain, that's a very important, factor for bond companies, because it tells them, and if you look at just one isolated period, like this would be a lot of projects to be experienced profit fade from the prior period. Every contractor is going to have some profit fade on jobs. That's the nature of the business. But the overall trend is really what bond companies are looking at more. They would expect to see over a period of time, multiple WIP periods, let's call it a couple of years, that most projects would stay fairly steady in terms of their profit margin to improving, and then having several outliers, where you would see fade. If we were looking at WIP period after WIP period and showing consistent profit fade on jobs, to the bond company, that would say something's wrong here in terms of the WIP processes. It would just call into question whether the contractor knows their cost, what is their meeting process for WIPs, and so forth. And I've had a couple accounts I've worked with over the years where we really had to dig into the weeds on that, and it really boiled down to how the communication between the field and the PMs and the office, and that there was a bit of a breakdown there. And that was one where once the owner of the company really got on board and pushed updating WIP processes and the importance of those, things corrected themselves significantly, and it brought a lot more confidence, with the bond company. Because if the bond company is going to be making underwriting decisions based on profit margin estimates, okay, and so if they're consistently seeing fade, how much credence can they give at any point in time on the current margins? What they're going to do is they're going to, in their forecast of profitability, which the WIP is also a key part of, they're going to discount what they feel like ultimate net income is going to be based on the profit fade. So again, it's not about really one point in time worrying so much about having a few fades there, but it's a trend that contractors want to focus on, and it kind of boils down to how are the PMs and owners assessing profit estimates on a monthly basis and really taking a realistic look at those profit margins. From accounting rules, you got to be realistic anyway, but if there's going to be those elements of the job that are, you can either choose to look at it as just with rose-colored glasses, or you can say, okay, this is likely too optimistic of a margin. We need to make sure we're really showing what we're expecting to get here, and be a little bit more conservative, on that front. And so all that will lead to a more consistent profit trend, over time, and going back to the bond company's confidence in the numbers.
I do have a question from the audience. This is from Mr. Lou here. Should the contractor submit WIP monthly regardless to make the bonding company comfortable with the contractor for future bid bond requests?
I would offer that. The bond company, I will guarantee you they will take the monthly WIP and be happy to have it and put in their file. They won't always, if everything's on a steady pace, they won't always dig into it deeply on a monthly basis. They guarantee we'll do it on a quarterly basis, because bond companies are like every other company out there, right? They have, and they vary a lot just in terms of their personnel, but they're going to have limitations in how much they can, analyze at once. I've had a couple, when I was at Travelers, I had a couple contractors that offered that, and I loved it, right? Because that is not the norm to offer that. And if you're doing it anyway, you might as well offer that up to the bond company, because that will just build rapport, and they will be happy. Especially the larger bond companies out there, they will take WIP data and they will analyze it to another level. They'll do long-term 3 to 5 year, profit fade, profit improvement trends, and so forth. The more WIP, I would kind of turn the conversation to the bond company furthermore and encourage them to share their extended analysis with you. It's kind of a give and take. You're going above and beyond to share monthly WIP reports with them. They will be happy to share additional analysis with you, at least on the, you probably meet with your bond company once a year. That's kind of the standard. I wouldn't be shy about asking them to share, the analysis that they go into with WIP reports of that detail, and they'll probably have some good feedback for you.
That's great for the audience out here. I don't know if you ever have taken your bonding companies up on that, but yeah, trying to understand what they came up with is great. Look at their analysis. And I think great advice. There's another question. I apologize to the audience for neglecting to look at this, but we have a few more questions here.
Right.
How frequently is the data in the ProNovos WIP report updated? That's a really good question, because the WIP it really has two sources. The first source is your accounting system. You could sync the data whenever. If you don't sync it, it's going to refresh every night, but you could sync it on demand. The second source is really your project manager. It is whomever is responsible for understanding what the estimated cost at completion is going to be. So when you look at the frequency of the updates, there are two sources. I think there's also something that Ryan was alluding to that I want to talk about, and that is the historical trends of a job. Before the audience came on, I was chatting with Ryan, and I was asking him if bonding companies or bonding agents ever look at like specific cost codes, and he told me no. And what that tells me is the data that is submitted to the bonding agent or the surety company, is really at a high level, and it's up to that particular company to build the history behind these jobs. The reason why I bring all of that up is because I think it's important as a financial manager or an owner to be able to see the historical trends of the job. This is a demo environment, by the way, but I want to show you something that I think is important, because when you're able to really understand the margins on the job over time, like you're seeing here, you are starting to understand the wild swings. Now, if you're running a project and these swings look like this, you probably need to think twice about who you have updating and contributing to this. But the other thing, and I'm curious to hear your thoughts on this, Ryan, I don't know if you ever ask these questions, but when you see fluctuations in margins or over under billings, do you ever ask about root cause?
Absolutely. Absolutely. Yeah. And it depends on how significant the job is, right? If you're talking about a small job that's not that impactful to the overall financial results, you don't want to fatigue, your client with too much questions. It needs to be very pertinent to the overall
Mm,
projections of the company. But like that situation that I mentioned, the one project here that had the loss on it, um, you would certainly, the bond company would be interested to know, what's driving that. And for a contractor with this type of backlog, that type of loss is probably not going to be that impactful, to the overall results of the company. But they're going to be curious on what went on there. And the larger the job, the more attention that gets because of the significance of it to the overall financial picture. Also, going back to the company in growth mode, it's very important that as you push a surety, and I know I'm going a little bit, out of bounds of your question, Bruce. Um, it's very important that those jobs that you push the surety on, that are on the larger side, perform well, right? Because
uh,
you're asking them to stretch. And so being careful about picking those opportunities. And I know that's kind of obvious, but that example that I provided, a job that's three times the size of any completed job that you've done. Um, to throw up a loss on a job like that, right? That can stifle, the growth of your bond program. Doesn't mean it's going to shut it down, but your plans to grow the program in terms of job size and maybe just overall backlog, the next time you have a job in that size range, the surety may say, well, let's start kind of lower, twice the size of the largest job, and everything may need to kind of line up, perfectly on that. But every situation is different. But I did want to highlight um, just the significance of larger jobs to sureties, and at least putting up a solid profit figure on those.
I love that. I want to come back to that, but we have some other questions here. This is for you, Ryan. Have you created WIPs with columns for original contract price, approved change orders, and pending change orders being picked up to give more detail to total updated contract price?
I've seen all of those. I think the change order one is good. Pending, would be secondary to, the approved change orders. But if you have something significant there, that's giving the surety even more information and setting those expectations, and can be good conversation points with them in terms of how things are progressing. The bond company will never complain about having more detail. That's because they can extrapolate exactly what they need and exactly what they're interested in. If you have more detail in there, that's showing them that you're even more plugged into the progress of those jobs, and that's always going to be a positive.
Got it. Got it. Um, another question from Mr. Williamson. Have you ever seen bonding companies provide industry metrics for trade type, revenue size, or any other segmentations?
So be sure I'm understanding that right. Are you referring to benchmarking type of financial information?
I think so, yes. It does
Okay,
sound like
okay.
it is
So
benchmarking.
yeah, there are several bond companies out there that provide that, and it's kind of, I'd say it's limited to kind of pretty much your top 10 largest bond companies. I mean, there's 100 bond companies out there, or more, but those top 10 have enough data. They have enough clients, enough investment in systems to where they build out financial benchmarking reports. And when I was at when I was at the large surety that I was working with, I created a lot of those types of reports personally and put those together. And I know everything that goes into them. But they are valuable. Now it goes back to the one, you need to understand the data that's in those reports. What are they building that off of? And you need to understand the thought process for how they put together that peer sample, because generally they're going to put together a group of contractors that should operate in the same industry as close as possible to what you're doing, the same revenue range, territory, et cetera. And they should be able to explain their process for doing it, because that can make all the difference, in the world. And in terms of how you look at the information too, if you're actually going to consider using that report to make business decisions, ask lots of questions there. And that's where having a bond agent as well that's very familiar with those reports and has put them together can kind of help you dissect that and make sure we have a full understanding of what we're doing. When it's done right, when those financial benchmarking reports are done right, they can be very valuable, because you do have a good benchmark of gross profit margin trends. You have good benchmarks of overhead. Some of those reports can provide you a peer sample comparison to your financials on where you currently are as a company in terms of revenue. And they can also include a second sample, not all of them, some of them can provide a second sample of where you want to go. So say you're doing 25 million a year in revenue, and you're just operating in Georgia and surrounding states. So the business plan is to grow to 50 million in revenue, expand the territory a little bit. Looking at one of those reports can help you gauge overhead. It can help you gauge gross profit margins on larger projects. Typically the larger project you go, there's going to be some sacrifice on margin there. There's a lot of good things that you can get out of that. So I would encourage you to, with your bond company and through your agent, to inquire about those reports. Just be very curious about them, ask a lot of questions, and that'll help you get the best understanding. And they'll not everything in there will you want to use to make business decisions, but you'll probably have a couple gems in there that'll be valuable to you.
Yeah, I love that. We have another question here. This is from Mr. Cat. Are the root causes retrieved from the database or stored in ProNovos? And I think that's Mr. Cat, you were referring to when I had the fly up. This is actually stored in ProNovos. We've yet to find a system, an accounting system that that has these type of root causes. The root cause, I believe, is one of the best ads that we put into the system, and it's not because it's providing great contextual information on a particular job. I think another good reason is because every time you are getting feedback from the project manager, most of the time, if I'll say all of the time, if a project manager is making adjustments, it is because something is different from the current status quo. Either you're going over or you're going under. Otherwise, there's no need to make an adjustment. But one of the things that I think we're missing out on as an industry is gaining more insight into why. With this type of information, we could take this back to our estimators. We can, if you're doing a post-mortem, we could go back to the estimators and we could say, listen, this is what we've learned. We've managed somehow to save $4 million in reduced scope. We did this 7 times. I think when you start, and this is one job, imagine when you're doing it across all of your jobs and collectively as a company, which areas you're saving or you're losing the most money in at the cost code level. Great question. I appreciate that. And that actually brings me to the next section of our demonstration or presentation here. Let's talk about the team side of things. I think that going back to what Ryan was saying related to the WIP culture, it's not really just accounting, right? It takes an entire team. It's your people. One of the biggest drivers, I think, of a strong WIP is not just software. It is obviously the people. They're closest to the job. They know what's going on. They see the issues early. If they're making adjustments, now they can tell you the root cause. And Ryan, from your perspective, how important is it for PMs to be part of the WIP process and not just it be an accounting function?
Oh, it's absolutely critical, because your PMs should know all the details that are going on, in the field, and then they're gonna kind of be the hub, for communication internally, right? They're getting information from the field. They're gonna know the heartbeat of the projects. They're gonna be the main line of communication with your controller, CFO, owners. So, yeah, they're one of the most, if not the most critical elements to having an effective WIP. And going into some of those metrics, Bruce, that you brought up on your software, I mean, I think those are just excellent. I mean, obviously, you have to make sure all the information that goes in is as accurate as possible and it's being updated, on a frequent basis, which all goes into kind of making the WIPs part of the DNA of the company. But bond companies often don't get the privilege of seeing that level of detail, even in, annual meetings where they're coming out and they're catching up on year-end financial results and talking about current status of jobs and the business plan going forward. If you can provide levels of detail that show your understanding of job performance by project manager, and a lot of these other metrics, you're definitely showing, the bond company something. I don't want to say unique, because you do see some of those situations, but something they don't get as often, and it will definitely build their confidence even more that where you're at with all these metrics. And long term, you do this, the value builds over time, year over year of tracking this information. You're always going to get to a project or a time where as a contractor, you're trying to make a decision on, should I push here? Whether it's the size of a single job or taking on multiple jobs for, maybe it's a familiar owner at the same time. We're dealing with one of the riskiest industries, right? So you're going to be pushed there to have this data, especially over a longer term period of time. That's going to make you make such better educated decisions to know, for example, hey, our best projects and work similar to this has involved this PM, has involved this estimator. These were the things that we encountered, whether in terms of the contract conditions and so forth. And this software is really helping you, build out a little bit of a gold mine to be able to deal with situations like that.
You know, when I recognized the truth and the WIP being the most important financial instrument, um, we made a decision as a company to support contractors to make this process better in any way we can. And when someone asked the question earlier, how often is ProNovos being updated? And I said, it really depends, from your accounting system and then the PMs. When if we focus on the people, that's what we're talking about. We're talking about this culture. Um, I remember, and I did this class, and I had to interview a lot of contractors as part of my thesis, and I would ask contractors about the project managers and getting input from them. There were so many times, at least 10, 15 times, I heard it's so hard to get info from the field. And I'm talking about, this is coming from owners, this is coming from the CEOs of the company. And so as we discover I know why it's hard. It's because PMs are crazy busy. They have to sort through a lot of information to try to get to meaningful answers to provide. And so one of the things that we did that I thought was very powerful is I'm going to drill into a job. This is also going to go back to Mr. Katz's question. He was asking about um, the root causes. But when you have a PM and a PM is engaged in this WIP culture, I love that, by the way, and they have to understand what it means to participate in the WIP. I recognize that the PMs are crazy busy and we need to organize the information better for them. And typically, when a PM is engaged in this WIP process, they're looking at five major things: their financials, their forecast, change orders, billings, and their schedule. We wanted to provide the PMs with easy to access information, not running multiple reports. And we wanted them to be engaged and involved in this WIP process. And I think that the project review tool that we built is the perfect tool to help create and support that WIP culture that you talk about, Ryan. We have another question. And the question for you, Ryan, I don't know the answer to it, but hey, if Ryan doesn't know the answer, I'll get the answer for you. Is there a training program that you suggest for project managers who are involved with WIPs? Our PMs seem to underbill consistently.
Okay, so CPAs can be a great resource for, and I'd say the number one resource for getting your WIP processes in place. And it is important to be with a CPA that understands the construction business. If they don't understand, if they don't specialize in construction, that's not who you want, kind of being your lead guide on producing WIP. So I would start there. We certainly have plenty of resources that we could connect you with. Bond companies, our conversations, you're a bit more high level on that. CPAs, they're ground level because they're actually engaged with accounts all the time in terms of either producing in-house WIPs for them, or they're doing their compilations, reviews, or audits, at fiscal year end. So I would start there with your CPA. And if feel free, by the way, on any of this, anybody who wants to reach out, I'll be happy to guide you in the right direction on some experts in that field.
Yes, absolutely. This has been time went by so fast. The more we talk, Ryan, the more I'm engaged and I want to learn more from you. But to bring it home, a strong WIP, I think, isn't just for bonding. I think it's a foundation for running the business. And I think we have to also understand how it all works together, from cash flow planning to forecast backlog burn, performance benchmarking across PMs, and then the staff and resource. I think that when you are looking at trying to grow, and I love how you talk about growth when you have a job that's three times bigger. As a contractor, I think we should, and as a business owner, we should be trying to grow. I'm curious, Ryan, when you see a contractor using their WIP, in a way of it being a business strategy, what does that tell you as a surety advisor about that contractor and your willingness to do more work with them?
Oh yeah, I mean, there's a direct correlation in the rapport you're going to have with your bond company and your capacity and your overall terms of your program with your WIP sophistication. Now, of course, there's other fundamentals of bond underwriting, like the amount of working capital and cash in your company, your overall profit margins, and so forth. But bond companies are interested in WIPs because they're providing them with a lot more detail behind the numbers on the balance sheet and the income statement. And not to be too repetitive, but I mean, it's given them a much better idea of the type of work you're doing, size contracts, the contracts that you're most successful on, the contracts that you struggle more on, it's allowing them to forecast out, on their projection. So without the WIP, they're a lot more limited with just looking at the balance sheet and income statement. Those are always very important too. But the well-established bond accounts for sureties, the WIP processes are going to be fairly sophisticated, and it will vary. Sureties can work with companies depending on the size, and create a plan. But yes, very correlated with the bonding relationship and the success of that.
Excellent, excellent. Well, there were a few other questions I couldn't get to. I will send those questions to you, Ryan, and hopefully you can reach back out to them.
Oh,
Ryan,
absolutely.
if anyone wants to reach out to you, this is your email address. I assume you welcome questions and business.
Absolutely. No, I'm always glad to help.
Yeah. Well, any last words for the audience, Ryan?
No, I enjoyed didn't get to meet you officially on this, but love talking about WIPs and the importance of that. I just hope some of the information is helpful to you and your business. And like Bruce said, feel free to reach out if I can ever assist.
Well, I appreciate you joining, and for the audience, thank you very much for attending. I hope this was valuable to you. Please reach out to me, Ryan. We love to keep the dialogue going, and I wish you all a wonderful week, and thank you very much.
Have
Take
a
care.
great day. Thank you.
Thanks.